Good evening. How's it going, everybody? Thanks for joining. Today we're going to take a look at the latest set of data from the CFTC. We're going to look at what it looks like on the spreadsheet. We're going to go in depth and take a look at a snapshot of what the positions look like. We did this a few weeks back and I got a lot of good feedback on it, so you guys wanted me to do it again, so we'll do it again. This is one of the first things I do every time I plot the data into my spreadsheet. I look at the snapshot. Okay, I just want to take a look at what the banks are doing, any big moves, any big increases in shorts or longs with any of the assets, and that pretty much sets me up for the rest of the week. I look at what the banks did, any type of moves, and I ponder, why would they go so bearish? Why would they go so bullish? And I keep that thought in my mind so that when I go throughout the assets and take a look at the individual positions on those assets and look at the supply and demand dynamic, I can determine what is taking place with price. So a lot of things are going on right now in the markets. A lot of things. Okay, we did a session earlier today in our level 1 session, and one of the main things that we were talking about was following the storyline of price. Okay, a lot of people always come to me and they're like, should I buy, should I sell? It's not that simple. Okay, trading isn't just about buying and selling. It's about knowing what's going on, why it's going on, and then knowing if that is the right condition to be buying or selling the market. Okay, because remember, prices go up for two reasons: a heck of a lot of buying, okay, or closing off short positions. All right, and prices drop because of a heck of a lot of shorting or taking profits on long positions. So those are 4 different scenarios that could be taking place that causes markets to move up and down. So if you don't know why that market is moving, then you shouldn't be participating in it. That's the key thing. Okay, so taking a look at the CFTC data is one of the greatest ways, in my opinion, to determine what is taking place with price. And so using the spreadsheet is one of those tools that I use. So let's start, shall we? Let's start by taking a look at the positions here. So let me just look at the change. Where are you? No. My pen doesn't want to work, so we'll just shut it off and open it up again. So I always start by looking at the change column right here on the right hand side. That's where I start. I look at the change column and I look at what's the biggest numbers. So as you can see, I'm looking down, and I come across 43,000 positive. That's pretty big. And I scan across and I land on euro. Now, if you will remember, we had some bullish momentum, some strong bullish momentum on the euro, okay, last week, all right? And do you know why we had bullish momentum on the euro? Understanding why we had bullish momentum is extremely important, because if you don't understand why the euro was moving up, then you wouldn't understand what was actually taking place with respect to the euro. And actually, all of the major currencies, because believe it or not, they're all correlated. Okay? Some kind of do their own little things sometimes, but they're all correlated. The main theme right now, what's happening with the currency market, all comes down to what's taking place with the euro, in my opinion. Okay? That's my opinion. And I'll show you why it comes down to that. Because when you understand what's going on, then you'll realize why everything is just waiting for the euro to do what it needs to do. Okay, so do you remember last week euro was very aggressive, okay, very bullish? So what was the reason why? If you've been following us and following our Telegram and Twitter, you would know that I was posting some updates with respect to inflation data last week. Remember the inflation data? They came out with negative inflation data. Do you know why? Because it was viewed as positive for the euro. Do you know why they wanted it to be positive for the euro? because retail traders were massively short. Okay, do you know why they would data for the euro? Is because if the retail traders were so massively short, what they would want them to do is to offload their short positions for a long position. Okay, that's why. And so that is why the euro was pushed up. Okay, this is all my opinion, but I'm not just creating this opinion out of nowhere. I'm not just plucking things out of the sky and making things up. This is my opinion, professional opinion, based on looking at the CFTC data, the media, okay, the inflation data that's come out, and looking at the supply and demand dynamics on the chart and putting it all together using the Sherlock analysis process and coming to a conclusion, right? So, so again, let's go back and take a look at here. Euro, 43,000. That's pretty aggressive. Bullish. Okay. Then I look at US dollar, Japanese yen. Look at that. 47,000. Interesting. Very strong euro, very strong US dollar, Japanese yen. Keep that in mind. Okay. Now we go further down and we come across this one here. 50,000 negative. Which one is that? Well, we go across and we land on oil. Are we surprised? Negative for the oil? No, we shouldn't be surprised, right? So we saw a big drop in oil. I did an article on the blog. You must read it with respect to oil and why price did what it did. Okay. We go further down and that's it. Okay. So the three that really stick out for me are 1, euro, bullish. 2, oil, bullish, bearish. And 3, US dollar, Japanese yen, bullish. Those are the three that stick out. So those are the three that I would be focusing on. All right. So now that we have those three, just keep that in mind. All right. So now let's start by taking a look at gold. What do we see with gold? So if we take a look at long positions, what can we see? That over the last few weeks, they've been somewhat aggressive with long positions, right? Okay. And at the same time, we look at shorts, what do we see? What we see is that they used to be aggressively short with their gold positions. They used to be back here as price was dropping. Then all of a sudden price rallied up and they closed off their short positions. Okay, so that makes sense. When we look at the data, we always want to look at the chart and see if the data represents what we're seeing on the chart so that we have an understanding of why they're doing what they're doing with their positions. Now we see over the last few weeks that they've been aggressively adding to their long position, but we also do see that they were pushing price up on the chart. Okay, and then taking profits. You see the dip down here? You see the dip down in price? And you look over at longs and you see the closure of positions from 261,000 to 254,000. Now, I tell you, if you look at commercial positions, they're going to show something completely different. Okay? They're going to show you something completely different. But isn't that what you're told to look at? When you read the books out there, when you read the websites, don't they tell you should be looking at the commercials data? Interesting. So you would see a different story. You wouldn't see the reality of what's going on. Now, one thing I want to point out to you is right here, the coloration of the cells here. Do you see that? What color are those cells? Bluish. You know what bluish means? It means neutral. It means you really shouldn't be trading gold right now. Why? Because you want to be in line with what the banks are doing. If the banks are buying and accumulating a strong long position and you see the coloration of the cells turning green, that means, you know, full throttle ahead. Okay, that's when you want to be joining in. But if they're neutral, you hold back, right? And if you take a look, they were neutral all the way back here. Remember back here? Look at these cells from April all the way to August, beginning of August. Okay, when they got red, beginning of August, what happened? Big drop in price. Isn't that interesting? You see that? Okay. When the cells started to turn red, look what happened. Okay. The cells started to turn red, and look what happened when price dropped. Up until here. Okay. Now it's no longer red, now it's blue. And now look what's happening with price. Okay, sideways. Neutral. Okay, so in terms of gold, I wouldn't be a buyer right now. I wouldn't be a seller right now. Because the sentiment is neutral. They're not accumulating a strong long position. And they just started offloading short positions. So with respect to gold, I'm sitting on the sidelines. All right. Let's go to the next one, oil. Remember we were talking about this one being negative. Okay. Negative, does that mean we should short? Well, take a look at the coloration of the cells here. What color do you see them? Blue. That's neutral, right? Right. So, last 3 weeks, right here, neutral. Okay. Why neutral? Because they used to be bullish. That's why. And that's why you see the big rally in price. The cells turned green. That was a bullish signal. Okay. From the beginning of September, right here. Beginning of September. And we saw the rally. Now price is dropping. Big shift in positions. Look what they did with their shorts. Shorts used to be very cooled off. Their positions used to be very cooled off. 90,000, 82,000, all of a sudden, boom, 148. Big drop in price. And look what they did here with their long positions. They took profits on their long positions. So they accumulated along from demand. Remember the demand zone that we were looking at? And I said most likely price is going to rally up from here. Well, they used that demand. They started buying, causing price to come up here. Took profits on long positions. Now they're accumulating a short. But this isn't strong enough to be starting to get into a short position yourself. Okay? A lot of people will see this drop in price and they'll be like, oh, maybe I should short. That's one of the most powerful things about the CFTC spreadsheet is because you look at the coloration of the cells and you see it's blue. And that's telling you exactly what the banks are with their positions right now. Okay? It's telling you they're neutral. So you should be neutral with oil. So with respect to oil, I'm not looking to open up a position right now. I'm on the sidelines. Yes, we had a nice drop, but it doesn't matter. We just wait and see what they're going to do, okay? When I start seeing trends being built on the lower time frames, and I start to see the coloration of the cells starting to turn red or green, okay, that's when I will open up a position. US dollar, not much going on here, so we'll skip right through that. Aussie, we know what's been going on here. They've been focusing on shorts for the longest time. And as you can see, August 22nd, they had 135. Took massive profits on their short positions. And that's all they've been doing is been focusing on their short positions. So there's not much going on there as well. USCAD's a very interesting one. Look at the coloration here. I want you to look at the coloration. 83% of their positions are geared to the long side. You see how they used to be neutral with their positions? They entered into neutral territory because prior to that, it was bearish. Okay? Starting the beginning of July. Bearish down here. Then neutral. Now bullish. This last phase. Okay? Take a look at net positions. You see what net positions were doing? All throughout here. Bearish. And now look how bullish. 70. Okay? Now, if you look at the supply and demand dynamics that are taking place on the chart, here's the monthly chart on the top here. Monthly chart. You see this? This is a supply area. Okay? So we're right underneath that supply area. So if we contact it, there could be some stalling. There could be some pressure to the downside, which is something that you should be careful about. I would very much be wanting to look at taking a long position on the USCAD. And we've talked about this at the school. The only issue is there isn't any demand areas that the institutions created on lower time frames for us to enter. So that's what makes this a lower probability trade, especially with that supply there. Okay. So we move forward. US Swiss is a mess. Okay. Euro US dollar. Here's the one that I wanted to get to. I told you about the bullishness, right? Okay. And I told you the reason for the bullishness. So let's take a look at the long positions here. See how aggressive they've been for quite some time? Okay. You see over the last few weeks, we went from 210, 212, 221. And if you take a look at shorts, look throughout here. These weeks here, they're more aggressive with shorts starting at the beginning of October. Okay, which is why price dropped here. They've been since closing off their short positions, so they're profit taking on shorts, but longs have still been aggressive. Now remember what I was saying? Remember what I was saying? You remember when we had 264,000 right here, where price was 264,000 longs. They needed to find buyers. Remember that? And they did. And that's what caused price to drop from here all the way down there. Is this cycle of them luring retail traders to take their long positions from them. Okay, what did I just finish saying earlier this session about what they did with the inflation data? Looking for retail traders to enter into long positions, because right now they're aggressively short. But what do you think they're going to do when their aggressive short position, their 92% of their position is geared to the short side, and the banks keep on pushing price up? What do you think's going to happen? I'll tell you what's going to happen. Retail's going to freak out. They're going to offload their short position, and they're going to start getting in long. Where are they going to get those long positions from? Right here. Okay. These are the long positions that are eventually going to be passed on to retail traders. Okay. So I still have a bearish bias when it comes to the euro. Okay. We still have a bearish bias when it comes to euro. But they're not going to drop price when retail traders are massively short. It's just not going to happen. They're going to drop price when they are well positioned for it. Okay. Look, just a few weeks ago, there were 130,000, 125,000, 123,000, 112,000. Their shorts were reducing. Why do you think? Because they were giving them to retail traders. Okay? But when retail traders offload their short positions at the highs of price, these numbers are going to go back up again. Wait and see. And what do you think the banks would rather be? Short down here or short up here? Okay. So, so that's what's going on right now. So, you know, we saw this bullishness. Some people were asking me, should we go long? Well, yeah. You want to go long? That's extremely risky, because the second retail traders start offloading their short positions, the banks are going to drop this. So in that circumstance, I wouldn't want to be going long. The banks are not accumulating a long position with the idea of pushing price higher. That's not what the supply and demand dynamic is suggesting to us. So if that was the case, then I wouldn't mind going in long, but that's not the case. All right. So that would be extremely risky. All right. So now you understand what's going on with the euro. Let's move on to the pound. Very similar, I suspect, what's going to play out here on the pound. Very similar situation to the euro. So we move forward. US dollar, Japanese yen. This is the one I want to get to. This one's a good one. Remember, at the beginning, we said bullishness on euro, bullishness on US dollar, Japanese yen, right? Okay. Look at the positions here, folks. Look at the long positions. Look at that 158,000. That's huge, okay? Huge. But they've been there before. Just a few weeks back in October, they're already there, okay? Now, remember, we have supply here, and we have demand here. Price is stuck in this range in between these two zones, very close to each other. Very awkward. We don't see stuff like this very often, but okay. That's the situation that we have. Once that supply gets taken out, there's no stopping price from heading higher, okay? I have targets up high, 157, okay? We're at 149. I have targets at 157, okay? I'm looking to enter a long position here. I am. Look at this here. 85% of their overall positions are geared to the long side. They're at 158,000 right now. The maximum size is 237,000, so we're far away from that. Okay, their average position on longs is 139,000. We're way above it. Look at shorts. You think they're focusing on shorts right now? Not in the least. Okay, their positions are cooled off when it comes to shorts. So I'm watching this one for a signal. It's retracing now, which is beautiful. I think a little bit more downside is what we're going to be looking at. Okay, and then eventually momentum will shift. Just like I'm expecting the euro to drop when retail offload their positions for longs. I think that movement is going to be correlated with what's going to happen with the US dollar Japanese yen. So when the euro starts to dip, this one will start to curl up. And then I believe we'll start seeing signs on the lower time frames of the banks accumulating a position. And then price will start to head higher. Okay. And Kiwi, not much going on there. S&P 500 though, this is an interesting one. Price is rallying. You see where it's coming towards. Massive supply. So there's a lot of talk right now. Is it going to go higher? Is it not going to go higher? Nobody knows anything. Okay. When you know what's actually going on in the markets, you know that you shouldn't jump to conclusions. Nobody should say the market is going to go higher because nobody knows that. But I can tell you, if the massive area of supply that the banks created is removed, then I know the odds are price is going to go higher. Okay? Because what controls price is institutional selling and buying. And so this is a major area here. It's not an area to be ignored. Right here. When price gets up there, it can easily drop. I'm suspecting that this momentum to the upside is going to come to a big halt when it reaches that area. But then what happens after that is going to be the big move. Okay. When we look at the coloration of the cells, what do we see here? Do we see aggressiveness here? No. In fact, I posted an article with respect to the S&P 500, and one of the members in the Telegram channel posted some data, which led us to conclude that this big move was likely shorts being covered. Okay? Because when we look at long positions, we're not seeing an aggressive increase in long positions from the banks. But we are seeing an increase on the charts from 4,200 to 4,500 right now. So they're neutral. We don't see aggressive buying, and we're coming into a massive supply area. So this is something to be careful with, all right? I know a lot of people got, really excited, and all the headlines are, biggest move in the last 3 weeks, and all these articles sound very bullish, but believe me, the wording of those articles are meant to trigger emotional responses. This means jack, okay? Because if those articles said price is heading straight into a massive supply area, an area where the banks were selling this market, and this big rally, we don't see any evidence whatsoever that the banks are buying it and causing this massive push to the upside. If they wrote articles like that, you'd think differently, wouldn't you? Well, I'm telling you, that's what's going on. So I want you to be very cautious of that moving forward. Okay, ladies and gents, I think we covered enough. That's it. That's what I wanted to cover with you. All right? Good stuff? Great stuff. All right, good. I'll let you guys go. Take that, review it, write down some notes in your journal if you have to. But remember the key things that I told you, the key themes that are in play. And be patient, because we have to let these things play out. I want to short the euro really bad, but I can't do it within the context that's taking place right now. When it's ready and it starts to turn over and they're prepared to really drop the euro, then I'll get into a short position. Just like US dollar Japanese yen, I'm ready to go long, but it's just not the time. Just like I'm ready to go long gold as well, but it's just not the time. So let's just sit back, let things play out, and when the time is right, we'll react and pull the trigger. Okay, ladies and gents, hit the like and share if you can. That'd be appreciated. Thanks for joining again, and until next time, take care.